And we're live. This is Xenium.Live, where we talk all things money, finance, and property. I'm your host, Scotty North, on this Thursday afternoon. So grab a cuppa and a cookie and join us for some great content. Well, on today's show, my guest, who's appearing with me very shortly, I've been told that perhaps he is the greatest property researcher to ever have lived. But he's also known to be polarizing. You see, if you're an agent in an area where he's written about positively, you think he's awesome. However, if you're trying to sell a property in an area that he doesn't like, well, I don't think you'd be too keen on him. I'm referring none other to the founder of hotspotting.com.au, Mr. Terry Ryder. Terry, how you going, mate?
I'm generally pretty good. I'm a little bit sort of devastated by that introduction, but I'll go with it.
I thought that's the one you gave me. Is that not the one we're supposed to read out?
No, you totally ad-libbed that one, Scotty. But yeah, hugely flattering. So I'm embarrassed, but nevertheless, let's onward and upward.
All right. Well, let's do that. So you wanted to talk to us today about the four big trends impacting real estate. Now, most of my people watching my shows is our clients and our other followers and other bits and pieces. They would have heard about you. I mean, we talk about you on our emails. We use your reports for helping us find property for people and that sort of stuff. But do you want to give us a really brief rundown in case there's anyone who's living on a rock, doesn't know anything about you, and then we can get into what you want to talk about?
Okay, well, I spent most of the last almost 40 years in some form a specialist as a writer and researcher on residential real estate across Australia. I was working in newspapers. I was property editor at the Courier Mail for 4 years. Then I worked at the Australian Financial Review as a property correspondent, and then started my own sort of business doing related things like writing research reports. And in 2006, I started the hotspotting.com.au website, which was designed to help investors identify the best places to buy by spreading understanding on the drivers of growth, what causes a particular location to outperform where other locations don't, and some locations go backwards. So that's what has been consuming my time for the last almost 15 years, that particular website. Published some books along the way, and currently working on another one, which again will be focused on explaining why prices rise in some places and not in others.
No, that actually book sounds really interesting. So it's safe to say that for those of you who don't know anything about Terry, that he's got a little more than a few months' experience in this game, right? I mean, you've been writing about this sort of stuff for a long time, and as you just said, you've had hotspotting now for almost 15 years. So Terry, tell us about the four big trends that are impacting property right now, and why they're four, there's not 10, or there's not 2, and how did you come to that, and what effect are they going to have?
Yeah, well, I think it's important that people be aware of some of these trends, because the problem that all real estate consumers have is that if you use mainstream media as your main information source, you're going to be walking around with your head full of misinformation, negative sensationalism mostly. Most of our major media comes out of Sydney and Melbourne. Most of the people they quote, like economists, are based in Sydney and Melbourne, and they think that's pretty much Australia. The reality is that 2/3 of Australians live in other places, and very different things are happening. We don't have the problems of Melbourne and most parts of Australia. We don't have some of the negative forces happening in Sydney markets. What we have around Australia in most places is a series of major positives, and they're driving markets that are ticking over quite strongly. In some cases, very busy, very competitive markets, but we're not hearing about them in mainstream media. So out of all of that, I see 4 in particular trends that are very strong at the moment. And the one that media is now picking up on and starting to get excited about and writing about, but it's been underway for a couple of years, in fact, and it's one that I call the exodus to affordable lifestyle. I think it's the biggest single trend impacting real estate markets around Australia right now. It's been underway for a few years. Basically, in simple terms, with technology, more people realise they can work remotely. Therefore, they don't need to be in the big, expensive, congested capital cities. They can choose a different lifestyle. They can move completely out of the big city to a lifestyle area, sea change area, hill change area, maybe sell their home in Sydney or Melbourne and buy something of comparable standard, but at half the price or less in a regional centre, and then have money left over to do other things. So that trend's been underway for a few years, and it's been driving growth in places like the Sunshine Coast in Queensland, like Bendigo and Ballarat and Geelong and Victoria, the Central Coast and the Southern Highlands in New South Wales. But it's been exacerbated by the pandemic, the lockdown phase, which has made more people aware of the possibilities of working from home or working remotely. And so the trend is spreading, and it's going further afield. Initially, it was, I think, regional centres within 1 to 2 hours of the capital city, but now it's going further afield. Townsville's feeling the impact of it. It's a long way from Brisbane. And Victoria, places like Mildura, Albury, Wodonga and Warrnambool, which are 3 or 4 hours or more from Melbourne. And in New South Wales, again, we're seeing places many hours from Sydney starting to feel that trend, people moving to these affordable lifestyle areas, having realised that they don't actually need any more to be in the big, expensive city. So I'm sure that you're aware of this one, Scotty, in your work, particularly on the Sunshine Coast, but there are other places feeling it as well. What are you seeing?
Yeah, well, I mean, this is the thing, right? I mean, you look at the data, like the real data that's out there, and the announcements for infrastructure and that sort of stuff, and you're analysing that, and then of course we use that sort of data for what we do. But as an agent on the ground, so to speak, a lot of times you're seeing the coal face, and yeah, we're seeing people. We've always had that on the Sunshine Coast. I mean, especially there's always been the people that sell up in Sydney, cash up, buy something, as you said, for half price or 2/3 the price and end up with cash in the bank. And they've been done that forever. So it's kind of like, oh, we all know that happens. But to hear you come out and say that this is a growing trend and it's not just in certain areas, it's quite a number of areas, well, that's something that needs to be really considered when you come to buying a property.
Yeah. So mainstream media is now starting to write about it, only quite recently, but I think it's been the prime reason. What we've been hearing from people at the coalface in places like Ballarat and Victoria, for example, is that they're getting really large numbers of buyers out of Melbourne, both home buyers and investors, and that's been going on for a couple of years. And it got to the point where it looked like the Ballarat market had peaked, but it's had a second wave, and I don't mean a second wave of the pandemic, it's a second wave of demand from real estate buyers, because the pandemic and the lockdowns have kind of given more impetus to this trend that was already underway and supercharged it. So now we're seeing it becoming what I think, and what media is now starting to write about, as being the big trend in Australian real estate right now. So that starts to make investors think about where they should be buying. Because the beautiful thing about it for investors is, okay, if the markets that are really being supercharged at the moment and have these great prospects for future growth are actually, some of these regional centres where you're buying at half the price or less than the big cities, that's a fantastic plus for investors. You can buy more affordably, you're going to be getting better rental returns, and you also, if you're buying in the right places, great prospects for capital growth. So it's what I call a win-win-win situation for property investors, provided they're aware of it and willing to actually take some action and do something about it.
Yeah, I think that's a good point. I mean, it's one thing to be just aware of this stuff going on, or find out about it through sources such as yourself, but then there's got to be actions that happen after that. Otherwise, it's like, oh yeah, well, we did hear about that trend. We probably should have done something about it, but oh well, we're still here. So what, in your experience, there's there's a lot of your, I'm going to say, subscribers to your reports and others, they've followed you for a number of years now. I mean, there's obviously going to be some pretty good success stories in following previous trends you've identified. So, I mean, it would be prudent to see those guys and anyone new wanting to follow this to be doing that now. I mean, this is important stuff, right?
Well, it is. And the problem for most investors is that they're herd animals. they'll pile into the market when they read in a newspaper there's a boom on, whereas the smart money is out there doing something now ahead of all that. So the people who do best in property investment are the people who either lead the herd or detach from the herd and run in the opposite direction, probably the latter more than anything else. No one ever got rich following the herd because they end up buying too late. And quite often, herds are actually stampeding towards a cliff and everybody on it. They like the comfort of the herd, but it's actually heading for a disaster. And we've seen that happen many times in the history of Australian real estate in recent years. So the smart people are doing independent research. They've gathered around themselves a team of good advisors in various disciplines. As we always say, build your team before you build your portfolio. So they should be talking to people like you and getting you on the job for them and taking action now rather than waiting until everybody's. Because I actually think that the most likely scenario for Australian real estate in the near future is a property boom. And we're now actually seeing those economists who 6 months ago were forecasting a big decline in property prices now realise 6 months later how wrong they were. Westpac this week coming out with a new report admitting they got their forecast wrong, and now they're forecasting actually substantial rises in prices in major markets around Australia in the next couple of years. And that's certainly what I see happening. I think Australia's going to come charging out of this pandemic phase with a really major government effort to induce recovery. They induced a recession for health reasons, and now they're going to induce a recovery, and it's going to be infrastructure-led. And I think there's going to be a lot of economic activity generated by that, and we're going to see very active property markets. It's already happened in New Zealand. New Zealand's sort of got in and out of the pandemic much faster than Australia, and they're technically out of recession already, and their property markets are absolutely pumping, and I think Australia's going to do likewise. So, I think
that's really interesting. I just want to touch on something you said there, because I know that you study a lot of the infrastructure side. So is there some, not secret information, tell us the goss, Terry, but, what has the government been doing towards infrastructure, or they've been too busy just trying to get through, the COVID issue at the moment? Is there things that they're pulling forward that they had planned? Is there a lot of money being splashed around? What is happening with the infrastructure side?
Well, bringing forward are the key words. That there's always been the plan that, they've got a list of infrastructure projects, both at federal government level and all the state governments as well. But they've kind of been on an orderly list that was planned to roll them out over 5 or 10 or more years. But the consequence of being in this induced recession caused by the pandemic is that they're going to bring forward as much as they can. Anything that's shovel ready, they're going to bring it on just as soon as they can. That's clearly the plan. They're willing to go into budget deficits and all the federal and state governments around the country to achieve this, because they want to generate this recovery and get people back to work and avoid having long unemployment queues, etc. And I think that's going to be fantastic for real estate. So I was actually planning to talk about this more as the coming trend, but I think that's going to be it. It's not happening yet, but I think in the next couple of years it's going to be a predominant trend that will impact real estate, and we're starting to work on reports based around that right now.
Okay, well, that's interesting. Well, we might circle back on that. I've got some other questions, but let's carry on. You got your 4 big trends. So we've got the exodus to affordable lifestyle. So that's trend 1.
Yeah.
Yeah.
The second one is that the most active cohort right now around the country is first home buyers, and you sound a bit like a real estate agent trying to pump up the market when you say things like this. But I think there's never been a time in the history of this country when there's been a better time to be a first home buyer, provided you've got secure employment. You've never had interest rates so low, and you've never had levels of government assistance so high. It's just a fantastic time to be a first home buyer. Investors at the moment are pretty quiet. So first home buyers aren't competing as much with investors as they had been a few years ago. Amazing levels of government assistance, both federal and state, for first home buyers, really low interest rates, banks want their business. The home builder grant is supercharging a lot of them. But the point for investors is where the first home buyers are targeting, they're really pumping up those markets with their buying activity, and smart investor would be following that trend. So, okay, this is where the first home buyers are targeting or going to target logically. That's where I'm going to buy ahead of prices zooming, because inevitably they will in certain cities around Australia in particular.
Yeah, that's interesting you say that, because it's in our experience, especially in the southeast corner of Queensland, is that a lot of times when we deal with investors, they're in very, very similar, almost identical price points to where first homeowners are trying to be. And it's always this conflict, right? I mean, the investors are chasing that area because it's a highly traded price point. It's also, where good yields are and things like that. And but that price makes the yield effective and work for them is also the same reason that first homeowners are wanting to buy in that price point. And so if you're saying that investors aren't as active now, which is, our experience as well, they're not quite as active. They sort of held on to their money in the corona. But first homeowners are back. This is a good opportunity for first homeowners to get in, because normally they are fighting in that price point.
Yeah, that's right. And they've got the territory more to themselves than they normally do. It was interesting also to see some research in the last couple of weeks by another research organisation, which is looking at primarily comparing the cost of renting, a typical mid-market scenario, with the cost of actually owning in the same market. And their conclusion was that virtually everywhere in Australia right now, it's actually cheaper to buy than to rent if you're going interest only. And in most markets, except for Sydney and Melbourne, it's cheaper to buy than to rent if you're paying principal and interest. So that's another strong piece of impetus for first home buyers and other types of home buyers. That it's very advantageous when you get to a situation where it's actually cheaper to own than to rent. Well, why wouldn't you? All other things being equal.
Yeah. No, that's a very good point. All right, so we've got two. Are we up to number 3 on our big trends?
Yeah, the third one that really stands out is that the areas that got the virus under control early and have kept it under control are the places where the economies are strongest, public confidence is highest, and real estate markets are pumping the strongest. So we're talking about cities like Adelaide, Perth, Canberra, Brisbane to a certain extent, I think, and many of these major regional centres that are part of that earlier trend, the exodus to affordable lifestyle. So more so than Sydney and Melbourne, those smaller capital cities where the virus really isn't an issue, apart from the local the interstate borders being closed. Life is pretty much back to normal, and their economies are pumping strongly. I mean, Perth is a standout right now. Perth has had the virus under control for some time. Apart from the border closures, their economic life is pretty much normal. They'd got their vacancies down to very low levels. Rents were starting to rise. The resources sector over there is very strong, and their economy is improving. And out of all that, we're seeing this rising wave of real estate demand in Perth. And but a big part of that factor is the fact that they haven't been affected by the pandemic the way that, say, Melbourne and to a lesser extent Sydney has. So I think that's another factor as well that's having influence on real estate markets in different places around Australia.
So where they've got things under control is where things are booming, and I guess that kind of supports, as you said, that first point, because the regional areas, due to not as densely populated, just didn't have as much of an issue with corona as what the other areas did in the population. So those 2 points are going to be supporting each other, right? I mean, the regional areas by default have it more under control, and they're the ones where people are exiting to. Yeah,
right. And there are plenty of regional towns and small cities around Australia that haven't had any cases at all. They're sort of all sitting there wondering, Why are they trying to impose restrictions on us when we just don't have any cases and never have done? But in most cases, even in Victoria now, regional Victoria is now getting more and more back to normal because they've got the pandemic more under control than Melbourne does. So that is a factor in impacting on real estate markets, particularly when you take it in conjunction with some of those other factors. The two I've mentioned earlier, and the fourth one, which is very, very low vacancies. And again, this is a story that's not generally being portrayed in media because of that factor, where most of it comes out of Sydney and Melbourne, and their CBDs have got very high vacancies. They're actually amongst the few places in Australia that do have high vacancies. The story is ultra low vacancies around Australia. I mean, there are some quite a few, particularly regional markets in Australia, where they've got the lowest vacancy rates ever recorded. It's very common, and we're finding this every day when we're preparing different reports or updating reports. Vacancies below 1% are now the norm in Australia, and we're not hearing about that, but it's an extraordinary low vacancy rate factor.
It's so low. That's crazy low. I mean, it's not sustainable, right? I mean, that's we don't have immigration at the moment, so how do we have such low vacancy rate?
Well, I mean, I think it's because we had a bit of a boom, particularly in Sydney and Melbourne, sort of up to about 2017, and then there was the correction phase, and we went into a bit of a slump in those markets. And then when it started to come back late 2019 and early this year, it wasn't about investors, it was about home buyers. That was primarily that revival was led by home buyers rather than investors. So investors have been out of the scene in large numbers for quite a few years now, and so they haven't been buying properties to create the rental stock. And in fact, they've been selling rather than buying, and home buyers have been buying, so the number of properties available for rent has dropped. We've also had a situation where the level of new construction has been lower in the last couple of years. We had a bit of a construction boom, particularly apartments, particularly in the big cities, but that kind of sort of waned a bit in the last couple of years, and right now there's very little being built. Vendors are also reluctant to sell because they keep getting these negative messages in media. So you've got a reduction in listings of properties for sale. So when you put all that together, there's a shortage of property in Australia, shortage of properties for sale, shortage of properties for rent. And it's just progressively getting worse. And we've seen vacancies coming down, and all the markets that we track pretty much for the last couple of years, to the point where, as I said, vacancies below 1% are common. They are the norm now. And of course, that puts upward pressure on rents. And what we know to be true from experience is that where vacancies are low and rents are rising, prices will follow. That's a trend worth noting for investors.
Yeah, that's true. And it's also when investors start, perhaps too late, but getting back into the market, because then those yields start coming back around again. So, Terry, is there, I know this isn't, I'm not trying to ask for 0.5, but on that low vacancies and the stock levels and what have you, are we expecting any sort of post-war, post-GFC baby boom when everyone was home in Corona and had nothing else to do?
It's a very hard thing for me to comment on, Scotty. Not the sort of thing we research. What were people doing in the privacy of their homes? Look, I mean,
so hang on. I thought you had insight to the government, Terry. I thought that's what they knew, all that sort of stuff, right?
Well, I think the government probably knows way more than they should, but I don't think they know about that. The news that's been coming out lately is that our fertility rate has been dropping. So we're not producing as many new Australians as we were. And we couple that with the fact that international borders are closed, so we don't have the same level of overseas migrants coming in. And media's been playing that up as some sort of crisis. So I'm just not sure. But, we had all these people in an enforced lockdown with time in their hands. We do note from the statistics that there was an uplift in sales of beer and wine. So that you put those two things together, there may be a bit of a baby boom on the way, not necessarily.
Mate, all right. So that's it. So infrastructure spending in 6 to 7 years on schooling. Yeah, okay, all right. We can map this out now, right?
Yeah, well, there's a bit of a trend happening. But I think one of the things we did with those, we've observed these trends, and we see these four major trends which are impacting markets at the moment. Well, one of the questions I did ask was, okay, where are the places that are actually impacted by all four of those things? Because that seems to me that if you've got not one but four major trends and they're all happening in your market at the same time, that would tend to suggest there's going to be growth there. And there are, in fact, when you sit down and make some lists, a number of locations that have got all four of those things going on. I mentioned Perth. Perth has got very low vacancies, lots of first-home buyer activity, virus under control, economy getting back to normal as a result of that. And there are parts of their market where people are sort of moving further out because they don't need to be close to the city anymore. They can work remotely, etc. So Perth is getting impact from that. So is Adelaide. So is Brisbane. All those capital cities have those things happening in spades. But then you start to look at all the regional markets around Australia that also have all four of those factors very much happening. Sunshine Coast is one of them. First-home buyers are active, vacancies very low, exists affordable lifestyle, perfect for that. Not impacted any great way by the pandemic. And you can go around Australia and nominate many other regional centres that are in a similar position. And that's why I think we've got these really strong markets that we're not hearing much about in media, but we know that they're pumping away strongly. And people like yourself, and I have conversations with buyers agents and other real estate professionals around the country every day, and I'm hearing the same stories. They're saying how competitive markets are, how fast you have to move when you're acting for a client. No, almost too fast, because you want to do your diligence properly, and because the markets are so competitive in many of these places, you have to move very quickly. You miss out. Are you finding that in your work?
Yeah, for sure. And look, thankfully in Queensland, with the way the contracts are structured, we can sort of tie up a property and go through the the clauses process of due diligence or finance or building pest, etc., whatever. But in other states, when we buy stuff in New South Wales, it's not so much of the same story. I mean, they want to exchange, and you want it. Some of them are demanding, that's it, no conditions, unconditional contract on exchange. I mean, that can be a recipe for disaster for the wrong thing. Yeah.
So it's creating a bit of a problem, but it's not a bad problem to have. Just to know that there are markets that have those sorts of conditions happening. I know it's true in Adelaide. I was speaking to a real estate professional busy in that market earlier today. Personally, I bought there back at the start of the year, and I know from my own experience and from the anecdotal evidence that market is just so competitive. Vacancies are like 1% or lower right across the city, every postcode. It's a ridiculous situation, but it's a great time to be a landlord in that city, I can tell you. People competing for rentals, getting, when I bought there recently, I did my sums before I purchased, and ended up getting a rental that was well in excess of what I had originally had projected, because there's so much competition from tenants. That's the reality.
That's really interesting. I mean, you're getting even above rent than what you first thought of. I mean, you obviously have all these sorts of things in one report. What's the report called, Terry?
Well, we've got a range of reports, and we're about to produce some specialist ones more indicative of these trends. But our National Top 10 Best Buys is the one where we nominate the ones we think are the best 10 around the country. We also have a regional edition, because those markets are so strong at the moment. I really think that regional Australia is outperforming capital city Australia, as a bit of a sweeping statement. But on any metric you want to apply to measure real estate markets, the regions are doing better than the capital cities, certainly the two biggest ones. So we've got a top 10 regional hotspots report. We've got, for people who want to buy in the lower price ranges, because a lot of investors now can't afford to buy in some of the bigger cities anyway. So we have cheapies with prospects, we have a city edition, and we have a regional edition. So, there are plenty of markets around Australia. Some of them are in capital cities, some in the region where you can buy good property in, say, the 200,000s, get rental yields 6% and above in locations that have the credentials to deliver capital growth. And, that's what a lot of investors are looking for. And there are also some of those marketplaces where you can value add. And I think more investors increasingly are looking for those opportunities where you can buy a house on a block of land and so for 300-something thousand perhaps, get a 5 or 6% rental return from the house that exists, but you've got the ability, because it's a large block of land and the right zoning, to actually subdivide it and create a second property or two extra properties. So those sorts of opportunities are available, particularly in regional Australia, and there's some particular locations that have that more so than others. So all of those things are covered in the various hotspots reports that we produce.
Now, I know we've got to wrap up shortly because I think you've got salsa dance lessons or something you've got to nick off to. Is that right?
Yeah, I mean, and my Pilates class as well.
Yeah, right. Okay. Well, before you go to Pilates and salsa, I wanted to ask you. I mean, you said you bought in Adelaide earlier in the year, and I know that a lot of stock traders, those guys that are look over my shoulder and look what I do and do this sort of thing. You must get asked, Terry, where do you buy, or in these locations that you've listed out, who do you recommend to buy in that area? I mean, do you have an answer for that sort of thing or what?
Where I would buy, I did, well, people do ask those questions, and quite often you just get asked simply, well, where's the best place to buy right now, or where would you buy right now? And the thing is, they expect that there's like one correct answer to that question, and there isn't. The answer depends on the individual. So the answer that's right for me right now, which would depend on what I already own, amongst other things, because I don't want to keep buying in the same place. I want to buy. There's gaps in my portfolio, and that's where I'll be targeting. But for other individuals, it would depend on, their income, what they already own, their strategy and their risk profile. So there's lots of different answers to the same question. But I think that generally speaking, that investors should be thinking about the smaller capital cities and those key regional areas, not everywhere in regional Australia, but specific markets that have good level of affordability. The most important thing is the local economy. Real estate markets arise out of local economy. So that's what you've got to look at in the first instance. Is the local economy strong? Is it growing? Is it diverse? You don't want a one-horse town. You don't want to buy in a mining town or a location which is just about tourism. You want diversity. You want to know that the growth is happening in jobs and population. You want to know that there's good links to other important areas like the capital city. And all of those factors feed into a strong local property market. And then the prevailing trends, and we talked about the 4 trends that I see. And perhaps before we go, Scott, we could touch on another trend which isn't happening yet so much, but I think it's going to be the big one in the next few years.
Oh, is that like are you saying you got another secret trend to tell me?
Well, we touched on it before, but it's the one that I was sort of saving till the end, and that's the one about the big infrastructure spend that's coming. We're going to have an infrastructure-led economic recovery in this country. I mean, that's for sure and for certain. And we're talking about multi-billion-dollar individual projects and dozens and dozens and dozens of them. And so what people could profitably be doing right now is becoming aware of that and asking the question, where are the locations that's going to benefit from that the most? And, the Sunshine Coast, we've talked about, that's got a big infrastructure spend already underway. There's more happening. There's just an announcement just a couple of days ago that the state government's going to be spending $700 million upgrading the highway between northern Brisbane and the Sunshine Coast. that's going to have an influence. It's just going to add to what's already happening for the market on the Sunshine Coast. And around Australia, we're going to be seeing these influences rolled out over the next couple of years as state and federal governments fast track big ticket infrastructure projects, which are enormous in terms of creating economic activity and jobs. So that creates demand for real estate in its own right, but it also creates improvements in the amenity of places. So if somewhere gets a new rail link that didn't have one, that supercharges their property market. If there's a new motorway constructed or a new hospital or university campus built, like there was a new one open recently in the northern suburbs of Brisbane, which is going to be hugely influential for the affordable suburbs around that market. If you want a simple philosophy to benefit as a property investor, follow the infrastructure trail, buy real estate that lies in the path of progress. There's a little catchphrase that you might want to keep in mind. But there's going to be more so in the coming years because of this drive by governments to spend our way out of recession by creating big infrastructure projects. It's going to be huge, I think.
And so that coupled with if people are still going to move to affordability and or out of the cities, with activity in first homeowner and where things are under control with low vacancies, I mean nothing's ever a sure thing, right, in real estate, but that's about as close as you're going to get. Yeah,
I mean, and think about what's happening out there. I mean, one place that sort of pops up in my thinking from time to time is the regional centre of parks in New South Wales, in Western New South Wales. I mean, it's famous for its radio telescope that played a part in the moon landings way back when. But it's a good, strong regional centre in its own right. It's become a logistics hub, and that's really important. But it's a super beneficiary of the new inland rail link, which is already underway. This is one of the big infrastructure projects that's already happening, where there's going to be an inland rail link from basically Melbourne to Brisbane, but through regional New South Wales and some parts of Queensland, like Toowoomba. And Parks is, when they did the big launch last year, the official government launch with the Deputy Prime Minister who did it, I think the sod turning, they did it at Parks because Parks is going to be a central hub from that. So things like that should be on the radar screen of property investors saying, well, okay, you can buy the really good house in Parks in the 200,000 and get a 6% plus rental yield. And it's got these big things happening in its future. Yeah, it might be considered a bit of a roughie, but those are the sorts of places that they're going to be more on the radar screen than they might otherwise have been because of this big infrastructure push. And it's not all going to be happening in the capital cities. It's going to be happening in the regions as well. So important stuff to be aware of, I think.
Yeah, no, I think that's really good. And look, I think we need to end it there because, I don't want to hold you up from Pilates, Terry. Before we go, I want to have a shout out to Laurie Hobart, who jumped on early and was watching the show. So thanks, Laurie, for commenting and stopping by. Love the format and the sliding text. Great thinking. I'd love to take claim and credit for that, but it's all part of the software, Laurie. But don't tell anyone about that. And that's about it. We've got all through my notes. The last note I had was the regional infrastructure, which you've covered. Terry, Ryder, thank you very much for joining us. I really appreciate it.
We should do it again soon, Scotty. Let's have a chat about something else.
Mate, as long as it's property related, I'm there. And look, here we go. Before we go as well, we got Darren jumping in saying, great chat. Thanks, gents. And thanks, Darren, for watching. Appreciate it. That is awesome stuff. All right, well, I'm going to have to call it a day. Terry's got to go to Pilates and we're out of time. So thank you very much, Terry Ryder from hotspotting.com.au. If you want to know anything about Terry Ryder's reports, you can go straight to his website, hotspotting.com.au, or hit us up. That's on our details that have been scrolling on the screen the whole time the show has been airing. And if you are listening to our Xenium.Live podcast, of course, those details are www.xenium.property/join to join up and get updates for us, and hello@xenium.property if you want to email us. So no .coms, no .aus. We left that stuff for the people who started the internet many years ago. We're in internet 3.0. That's how high tech we are. All right. Thanks again to Terry Ryder. And I hope you all enjoyed his information. Fantastic wealth of knowledge. I call him the Oracle, but I don't want to embarrass him anymore. This has been Scotty North, and we've been talking all things money, finance, and property on Xenium Live.